Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the data cycle model for Monday the 12th of the 4th to Friday the 16th of the 4th 2021. It's basically our version of the economic calendar. We've modelled tier 1 and tier 2 data and we've written up the initial China and dollar, and we're going to start as we write up the new ones to save time. Right, so T1 tier 1, T2 tier 2, we've got January, February and March data as a whole month, and then which are discrete variables, and then we've got the first week of April, 29th to the 2nd effectively, 5th to the 9th, second week of April, 12th to the 4th, which is the week in question that's just gone by. So we've had the first 3 weeks of April trading effectively. Now these figures are cumulative, whereas these are discrete. Okay, so let's start with China then. Tier 1, -5, +4, so that's Jan to March, and then we've got +4, +5, +5, so we've got incremental improvements in the China tier 1 data cycle, not exactly setting the world alight, but it's moving forward in a positive manner. Right, excuse me. Tier 2, +10, -4, +11 for the months, -1, +2, -1. So positive March, and not really firing, fairly neutral tier 2. Right, dollar then. Tier 1, -5, +1, -6, so soft really, Jan to March on the tier 1, and we've now got consistent improvement. We've got +4, +6, +12 on the tier 1 in the first 3 weeks of April. Right, tier 2 then, +24, +36, so very strong Jan, Feb, and then we've dropped off in March, -8, and we're picking up again on the tier 2, +3, +5, +12. So dollar data cycle definitely on the up. Right, stop that there and we'll write up the next two. Don't go away. Right, welcome back. Right, we've written up the German as a country data and the EUR as the block of 27 nations. Right, Germany then, tier 1, +4, +7, +2, -1, -1, -1. So we've got basically a rollover in German data in April. Not drastically, but it's rolled over. +7, +11, +11, 0, -2, -1. Likewise, Jan to March, strong tier 2, and rolling over to neutral tier 2. Right, Eurozone as a whole then, -6, +13, -2, -2, -2, -1. Similar picture for the tier 1 in the Eurozone. +5, +6, +14, so strong incremental increases January to March, and then we've got +1, 0, +1, so it's steady to neutral on the tier 2. Right, we'll tie all this up at the end with analysis, but so let's stop it there and move on to the next two. Right, we're back again. We've got the yen, the JPY, the pound, the GBP. Start with the yen then, tier 1, 0, 0, -2, +2, +2, +2, so fairly neutral, slight positive on the tier 1. Tier 2, +17, +5, -6, so pretty strong January, and then it's rolling over, +7, +6, +6, so strongish tier 2 first 3 weeks of April. Right, the pound then, +3, +8, 0, +2, +2, +2, so strengthening to February, then rolling over a little bit and neutral, and generally marginally positive on the tier 1. +5, +8, -8, so we've got a weak March for the GBP, and then we've got +3, +3, +9, and we've got a significant improvement in GBP data in the tier 2 in the week that's just gone by. So stop it there and move on to the next tier. Right, we're back again. CAD, Canadian dollar, AUD, Australian dollar. Right, CAD then. Tier 1, +8, -4, +6, 0, +3, +3. So mixed, but generally on the positive and neutral to positive, really, tier 1. Tier 2, -1, +7, +5, Jan to March, +3, +9, +9. So we see an improvement, incrementally quite strong, April for tier 2 CAD. Right, AUD. Tier 1, +2, +2, +6, 0, 0, +2. So improvement Jan to March, and we've got a positive showing for April. Tier 2 then, +6, +8, +15. So very strong tier 2, Jan to March, +2, +5, +4, and staying pretty positive for April. So pretty strong AUD data cycle. Right, last two coming up. Right, back again. NZD, New Zealand dollar, CHF, Swiss franc. Right, NZD then. +2, +2, -4, 0, 0, 0. So deterioration and pretty neutral to positive Jan Feb. So we've got neutral tier 1, -2, -7, +2. Soft, slight improvement in March, -4, -4, -6, significant deterioration in first weeks of April. Right, Swiss franc then, 0, +2, 0, 0, 0, 0, so pretty neutral all the way, slight positive bias. Tier 2, -2, +11, strong Feb, -1, +1, +4, +4. So arguably an improving situation, tier 2 for the Swiss franc. Right, we're going to stop it there, and we're going to write up the summaries of these complexes. Don't go away. Right, we're back. Right, let's make some sense of all this then. If you remember that the weekly flows, and you can see a fuller update on this on our sister video, which is the flow cycle for the same period. If you remember the weekly flows for the majors, the dollar, euro, yen, pound, as modelled by us, gives us a negative unopposed driver in the dollar at -317 for the week, and therefore there were no backdoor flows, so we've got opposing positive flows coming from this weaker dollar going into the pound at +156, into the yen at +95, and into the euro at +66. So basically we had a weak dollar driving the market in the week in question, the 12th to the 16th, and the opposing positive flows were finding a home in the pound, mainly the yen next, and the euro after that. Right, so let's have a look at the summary of this then. So the China data cycle, arguably the tier 2 is a little bit soft to neutral, but the tier 1 is positive. So on balance, we're going to give the China is on the up. China data cycle, bear in mind this data is lagged. We're talking Q1 data basically. But anyway, the dollar cycle is definitely on the up. Germany is looking a little bit neutral to soft. So and the Eurozone is looking a bit neutral to soft as well. What do we know about the yen? Well, the yen is actually coming up, so it's got a positive data cycle. Bear in mind that this is going to be very linked with the equity transmission. The pound on the tier 2 is definitely starting to steam, +9, and it's holding its own at a positive level on the tier 1. So the pound data cycle is on the up. The CAD, likewise, the CAD data cycle is on the up, and the AUD is definitely on the up. And the NZD, well, what do we think about that? Well, the NZD is definitely rolling over. That's a soft data cycle on the down, and the Swiss looks like it's starting to improve as well. So that's where we are on the data cycles. So what are we doing then? What do we think is going to be happening? Well, we're short the USD. against the euro, the pound, and the AUD, and we're short the NZD against the euro, the pound, the CAD, and the AUD. Right. So if you look then, arguably, if you look at the dollar, you could say, well, it's got improving data. The dollar should be strengthening. But if you look at the overall scenario, you can see that basically, the dollar data cycle is improving, primarily off the back of stimulus, massive fiscal stimulus. They're printing like there's no tomorrow. Approximately 55 cents on the dollar are printed now. So the dollar is basically being pumped by a fiscal stimulus, and you're getting a debasement in the value of the dollar due to this increase in the money supply. So that's what's going on. And if you look at the yields came up and they're now starting to roll over. So the 10-year particularly. Right. So if you look at the dollar is likely to be soft going forward, as the market recognises that it's actually being the currency is being debased. Inflation is being used to inflate away the debt, if you like. So that makes sense why we're shorting the dollar. Why are we shorting the NZD when we think the whole China story is kicking in? So China, we've got this greater than equal to 6% target for GDP. I mean, they should blow that away anyway because it's off a low base, and a lot of these countries are blowing away the old sort of 2 to 3% GDP growth anyway. But China's definitely going for it. In July, it's got this 100-year anniversary of the People's Republic. So it's a party, literally. So we're now grinding our way through the second quarter. We've had the third week of trading in April. We've got May and June to really kick in. So you normally get, you're going to get the commodities are starting to come up. Copper and oil are likely to start to go up. US steel as well, off the back of infrastructure and all the rest of it. So why is the New Zealand being shorted by us? Well, it's being shorted because it's being shorted in a specific way in euro, pound, CAD and AUD, because we've modelled that this is where basically the elbow room is for the New Zealand dollar to start rolling over, and the New Zealand dollar has been punching way above its weight. It's been nearly 70% as a modelled complex from its high, 67% to be precise, and it's actually been punching above its weight, as we said, and is likely to finally succumb to this situation of falling, rolling over of the data cycle. So it makes sense then if flows are going to go out of the New Zealand dollar and they're going to go into the commodity currencies. Other than that, they're going to go into the CAD and the AUD. Now, if flows are going out of the dollar, you're likely to see a de facto rise in the euro. And the yen, we've got all this fiscal stimulus. The yen is likely to weaken due to the usual transmission there. So you've got the dollar, and the yen flows out of that. You've got de facto rise in the euro, even though the euro is neutral to so the euro isn't likely to scream massively. But the main one that's going to go for broke is the pound. The flows are going to go into the pound. We've got a positive data cycle in the pound. The pound as a complex is pretty much on the floor. It's only about 27% from the floor. So the elbow room is for the pound. And we've got this positive COVID environment in the UK because we've vaccinated the hell out of everybody, or nearly now. So basically this is why we're in this scenario. We think that the opposing positive flows, which are going to be coming from negative dollar and negative yen are going to go neutrally into the euro. The euro will reluctantly climb, but the bulk of them are going to start punching away into the pound. And likewise, if you get the commodity currencies coming up, the laggards are the AUD and the CAD. And so it's all pointing towards a sustained rise in these positions. We've had to come back a bit because of the market has been pumping the NZD, but it's now starting to roll over. So at every opportunity we'll be adding to our positions to short the NZD against the euro, the pound, the CAD and the AUD. So hope that was useful. Try and catch the sister video, which is the flow cycle. If not, see you Monday for the daily briefing. Thank you very much.